Another opportunity within the power center space is carving out pads. And I think historically, you had a 5 per 1,000 parking ratio where they really didn't take into account the cross-shopping component. Mm-hmm. So what you had is a lot of these shopping centers that were overparked. We say pull up on Google Earth today, see if there's a certain area of oil slicks in the parking lot. If not, that's probably not being utilized. Yeah. And I think the retailers were historically resistant to releasing the REA or CCR that said you couldn't develop that section of the parking lot. So, and I think when you look at that, coupled with cities recognizing it and lowering those parking ratio requirements, that's another area where you can really not only add,
interesting.
Again, financial value, you can actually bring another use and another concept to the center that maybe just what it needs to kind of revitalize it.
What's up, guys? Welcome back to How to Invest in Commercial Real Estate. Super excited about today's episode. We have a special guest, Grant Gary with the Woodmont Company. Grant is, I don't know exactly what your title is. What's your title?
2 titles, President, Brokerage Services, and Principal at Woodmont.
Okay, so President, Brokerage Services, and Principal. This is our third, about to do our fourth, probably before the end of the year, 5th, maybe 6th joint venture with working with you guys. Several of those have been kiddie academies. There's some other retail opportunities in the pipeline, maybe some industrial opportunities. Anyway, super excited to have you on the show. Welcome. Thanks for coming.
Great to be here. And I'll just say again, Braden and Brian, certainly very appreciative of the relationship with the Criterion Fund. And Joel, it's been great to have the relationship with you and your team as well.
Thanks.
So thanks for having me.
Yeah, so President of Brokerage Services, obviously you probably do a decent amount of brokering. Brokering is, putting somebody who needs a building, they need a building, they need something built. There's probably a decent mix between that, but, just getting started in brokering, what's the biggest piece of advice or what would you give somebody, is just step one?
Certainly, and I think again for Woodmont, our focus is and has been retail, for the 41 years now of the company. We operate 3 primary divisions: the brokerage division, we have a development arm, we also have an asset management, property management arm. But to go back to your question, in terms of brokerage, the key, and really what has sustained our company, while the technical is facilitating transactions, identifying opportunities, I think for us, it's really building relationships and adding value. And that's really how we look at it. There's a lot of people that can push paper, but to really come in and add value, and that value is changing today. I think as you continue to look at the way transactions happen, the amount of data that's available. So I think, but the key component is where can you add value in that, commercial real estate transaction cycle.
How many years you been with Woodmont?
I have been with Woodmont coming up on 12 years.
12 years. Okay. So I want to hear how you got started with Woodmont.
Absolutely. It's a great question, Joel. Thank you for asking. I was fortunate in one of those. I always knew I wanted to be in commercial real estate. I'll say I didn't know I wanted to be in retail. And so grew up in Austin and came up to Fort Worth, was going to TCU. I had actually gotten my real estate license in high school.
In high school.
Who
gave you the bug?
That's
like
awesome,
you said you wanted to be in commercial real estate.
Yeah, I was going to ask, who's getting you interested in commercial real estate at such a young age?
Again, I kind of often reflect upon that. And it wasn't, my family wasn't specifically in commercial real estate. I actually started as a caddy in middle school. And I think I was, I kind of look back, maybe that was part of what turned me in the real estate direction. But as I say, I was fortunate in that respect. And so when I got to Fort Worth at TCU, really after my sophomore year, I was looking at that time for an internship and was looking for a commercial real estate internship. Woodmont Company was the largest commercial real estate firm in Fort Worth. And so I just knocked on the door. And I guess as the story goes, I was kind of the runner, the intern for that summer. As I said, I cleaned the fountains, answered the phones at the front desk.
I love this.
And,
this is good.
I saw an opportunity, at that time, and Steven, the co-founder of the company, was fortunate to give me that opportunity to start doing brokerage in my junior year. So I was going to school full-time and started in the brokerage field from there.
Wow. Yeah, that's a really cool story.
That's a great story.
No, it's good for listeners that are thinking about getting in the game. It's just knocking on the door and saying, "Hey, I'm here. I want an internship." Now, if you're trying to replace $100,000 a year job, it's going to be a little tougher for you. But just getting in the game and getting around people, I think about Braden, your start at Precision. You just got in the room and you were willing to do whatever it took. And that's a key. You start absorbing the knowledge of everybody that's at Woodmont Group. Stephen, I'm sure you absorbed a lot from him just by being there. So that's cool.
Yeah, I mean, I think that's it. Certainly, I mean, again, we've always been a big proponent of ego isn't going to take you anywhere. I mean, it's putting your head down, working hard, not being, nothing's too good for you to work on. And our company still operates in that manner, and I think those are a lot of the keys. And we've been fortunate to have a lot of good young new team members come in, and they take that same approach. It is, especially in the brokerage business, I mean, you get out of it what you put into it, and that applies to a lot of industries. But I mean, certainly in the brokerage environment, and being able to kind of chase a lot of things or not a lot of things all at the same time really requires that discipline.
So in the beginning, you said, you guys are kind of compartmentalized in 3 different boxes: asset management, brokerage, and development. Let's just briefly touch on asset management. What does that look like for you guys? What is in the portfolio, and I guess just briefly, what does that look like before we move on to the other 2?
Yeah, absolutely. And I'll just say, the gentleman that runs the asset management, property management division for us had great foresight, in the 2007, 2008 years, with the evolution. We're going through maybe our second or third evolution right now in the retail space, and really started to forge some great relationships with the special servicers. And so at that point, we really developed specialty teams for enclosed regional malls, outlet centers, coupled with our traditional power center background within the retail space. So fast forward to today, I think we operate between third party as well as our own portfolio, about 26 million square feet of retail, and that's across about 26 states.
Wow. That's a big number.
That's awesome.
So we're fortunate, as I say, that's forged in relationships and hard work. And, I think, for us, we're able to bring an owner's perspective, to a lot of those assets. And so we're not just a third party manager. That's another key component of how we approach shopping centers, whether it's one we own and operate or whether it's one we're owning and operating for a third party.
Yeah, let me break that down just in case anybody doesn't know. But just to clarify, you guys, somebody is bankrupting or defaulting on the debt, maybe that encumbers an asset. The debt or the mortgage holder is coming in and foreclosing on the property, and then they're not in the business of running and operating this real estate. So they call you and they say, hey, Grant, Woodmont, we need you guys to run this for us until we can sell it or get it off our books.
Correct. That's exactly right. And I think, while there's certainly complications to all the various aspects of commercial real estate, at least we like to think retail is one of the more complicated, putting the puzzle pieces together. And I think when you look at a lot of these assets, shopping centers, you have co-tenancy, you have exclusives, you have prohibited uses, you have REAs, you have CCRs, and when you go through a bankruptcy or just operating those assets and understanding all those moving parts and how they impact value, how they impact leasing, how they impact disposition, I think you really need someone that has that really kind of expertise and just historical operating history to really know how to navigate all those various, really operating covenants governing ultimately the value of an asset.
Brian, do you remember when we looked at that mall in Northwest Arkansas?
Yeah, in Fayetteville.
Yeah, we almost bought. It was a smaller mall. I don't even know. We should look at what happened to that.
Yeah.
But if we had bought it, we probably would have turned it over to the lender, and these guys be managing it.
Yeah, right. I wouldn't be surprised.
So, do you guys buy property just to Woodmont to own?
We do.
And talk to me about how a company like yours, how would you guys decide in today's market what type of asset that you guys would go after versus trying to sell it for the owner? You're going to, hey, we're going to buy this. What would that look like?
Sure. So, I mean, I think it starts with where can we add value? I think in one of the acquisition elements that we're focusing on today is the power center space. And I'll say there's kind of 2 channels. One, when we looked at, going kind of back 8-10 years ago, we said, should we pivot? Should we be in the multifamily space? Should we be in the office
yes
space?
Is the answer to that question.
And it's not that we don't think those are great spaces. We just said really our relationships and where we add value is in the retail space.
Sure.
And we said we don't think it's going away. It's evolving. Ground up development is a challenge for those large scale projects, but we think there is still a way and there's still a need for 4-wall brick and mortar retail. So we leaned in. And one of the areas was, again, starting to identify power centers that we could acquire. At the same time, we shifted our ground-up focus really to the single tenant net lease space as one of the areas where we had that, in the within the portfolio, as another skill set and another value add component, it hadn't been a primary focus. So we moved that into more of a primary focus in identifying ground up single tenant net lease development opportunities really across the country where we'd historically operated as well.
So you're not buying any freestanding, you're developing single tenant.
Predominantly developing. That said, when we have a relationship that's in place and where there's an opportunity where there could be to acquire an existing facility and backfill it or retrofit it, we are looking at those opportunities as well. And we think, if I may, I think there'll be a number of those within the restaurant space, where you're seeing these larger restaurants that have had challenges or these concepts that just are no longer viable. The same thing for some of these larger banks. We think there's going to be a number of redevelopment or repurposing of those assets really across the country.
Yeah, I think so too.
Are the power centers that you guys are looking to buy, I guess there's some vacancy that you're going to bring some value to by finding a new anchor?
That's one of the avenues. It is. I think in looking at whether or not you can re-tenant, another opportunity within the power center space is carving out pads. And I think historically, you had a 5 per 1,000 parking ratio where they really didn't take into account the cross-shopping component. Mm-hmm. So what you had is a lot of these shopping centers that were overparked. We say pull up on Google Earth today, see if there's a certain area of oil slicks in the parking lot. If not, that's probably not being utilized. Yeah. And I think the retailers were historically resistant, to releasing the REA or CCR that said you couldn't develop that section of the parking lot. So, and I think when you look at that, coupled with cities recognizing it and lowering those parking ratio requirements, that's another area where you can really not only add,
interesting.
Again, financial value, you can actually bring another use and another concept to the center that maybe just what it needs to kind of revitalize it.
It's a genius idea, but it's so easier said than done.
It does take time. We're for the investors that are listening that were on the Perimeter Square deal, we're actually working on putting a pad there. But as you stated, we have to get Walmart to agree to release whatever hold they have on the parking ratio or that part of the parking lot.
That should be easy, shouldn't it?
Yeah, it should be really easy to just call up Sam and say, hey, I want to make some money on your parking lot. I think they're going to charge us. Maybe you could speak just for a second. What do you think I'm going to encounter there? They say they're open to doing it, but I think there's just going to be some type of monetary fee.
Yeah, I'll say one of the values that we see from a lot of the retailers, they must have a whole actuary department within their within their real estate section that deals with the waivers and restrictions. And so, I think it's changing. Again, historically, they didn't want it, and then again, it was we'll allow it, but it's almost at a cost that wasn't financially viable. And I think you're starting to see more of a partnership there, where there may still be an ask, but it may not just be a hard financial ask. And I think part of that is they're saying, okay, this is actually adding traffic to the shopping center and not taking away parking. I think that's one of the biggest changes, where you're starting to see more of the data that's available out there to be able to really demonstrate, okay, today if I bring in this fast food concept or this coffee concept, it's going to bring X amount of more traffic and actually increase my store sales. And that was one of the missing pieces, I think, historically, in being able to unlock more of that value. But I would be prepared in underwriting in your pro forma some additional consideration payable to Walmart.
Interesting. Well, that's fascinating. I've really appreciated watching the partnerships with Criterion. Hopefully, Precision Equity can do some stuff with you as well. That would be awesome.
Yeah, man. Thanks for coming on the show again. I really appreciate it.
Absolutely. No, we're certainly appreciative. Certainly look forward to having the opportunity to work with Precision as well, and continuing the great relationship with
absolutely.
Criterion.
Yeah. Thanks for your time.
All righty, guys. Well, we will see you next time on How to Invest in Commercial Real Estate. Thanks again.
Thanks.
Thank you.